Digant Haria joins us, co-founder with GreenEdge, and we've got Sushil Choksey. They both join us live. Digant is on phone. Oh, Digant, you're traveling that you're not joining us via video or Zoom?
Yes, on this day also, I'm somewhat on a holiday. I don't travel peak season, so
Okay.
I thought peak season
यहाँ
is
पर
over.
भी value, yeah, every time you have to find value, right? Even during travel you find value, right? When tickets are cheap.
Oh yeah, there's cheap and there's less rush, so I think value and enjoyment also increases. So
is there value in Reliance Jio after listing today, because it will be listing at a market cap of about 1.7 lakh crore? Do you think there is value in that franchise?
See, I just think that it's listed at a very fair price, like 1.5 times of consolidated net worth. You give 1.5 times net worth to a business which is just about to start. Like nothing has started. There's capital, there's management, and there's nothing else right now. And see, lending is not something where Reliance Jio will come and disrupt something. They're really good companies. There are a lot of good public sector banks, private banks, NBFCs like Bajaj Finance, Chola, already there. So I don't see that this should get a runaway valuation of say 2 times, 3 times. They need to prove this 1.6 lakh crore market cap itself is a lot of respect to the Reliance group. I think beyond that, it's a lot of hard work. They have to prove themselves just the way Bajaj and Chola did over last decade, or HDFC has done over last 20 years. I don't see much easier upside from here. It's already getting a good share of value.
See, 260, some would say that was way above what everybody anticipated when the real price discovery level for Reliance Jio or Jio Financial Services was discussed. So at the current juncture of 260 rupees with a market cap of 1.7 lakh crore, is Jio Financial Services a buy, hold or avoid? Sushil bhai?
Good morning, Nikun. Thanks for having me on the show. Taking from what Digant just highlighted, one has to figure out that Reliance always builds business which are top 3, top 5 in the business segment which they have always been in, whether it started from fiber or polyester intermediates or petrochemicals. And similar is the vision for all whether it is Jio on telecom or retail. And same would be the vision for Jio Financial. But that vision needs a 3-5 year time outlook. So if you're looking at buying a stock in the horizon as what you explained, I think you need to take 3-4 years. They've provided the capital on terms of net worth by transferring 6.1% shares. They've tied up with BlackRock. But the business to roll out and build a book, which is like 50,000, 1 lakh, 2 lakh crores over a period of 1 or 2 years, would actually emerge as a value once the result is known, whether they disrupt the market on margins, their pricing pattern, their borrowing cost would be lower on par with Bajaj Finance, but lending pricing needs to be seen. Secondly, what segment of business other than mutual fund they would announce now. The insurance definitely looks like the next play. I don't know about broking, whether they would penetrate or not, but it's definitely certain that potential is there, but you need a time horizon of 3-5 years to look at if you're buying in frenzy at today's listing.
My second question, Sushil bhai, is that let's divide the time frame into short term, less than 6 months, medium term, 1 to 3 and 5 year plus. For someone who's got a 6-month time frame, what should they do today? 1 to 3, what should they do? And 5 plus, what should they do?
Let's be viewer of the screen on pricing today. If you have a 6-month horizon, a lot of uncertainties in global and domestic market is definitely likely to pan out. And if Jio stands out with all the technology and banking rollouts, that may support. But I think viewing would be a better way to look at it in terms of like 6 months. But if you have 1 year, 3 year outlook, it can emerge as a buy.
All right, you got, I won't use the word a new kid on the block. At a market cap of 1,70,000 crore, you're not a kid. I mean, you are going to be one of the biggest company in India. And 1,70,000 crore, I mean, it's like saying 3 Zomatos together, just to give our viewers a perspective that what would be the size of a company which is from the Reliance table. And, it's it's like a free share which has come to everyone's demat account, which a year ago nobody anticipated and expected. But interestingly, no one from the Reliance family is there actually. That's very interesting. Of course, Mr. Ambani is not there, and none of his children are also there. These are professionals, and maybe that's the messaging which they want to stand out. That financial services as a business is going to be run and structured by professionals. First take on the listing on the day when Jio Financials has gone public on Bombay Stock Exchange, it's a downtick. 5% lower, 248 rupees. Digant, I'll throw that same question towards you. Less than 6 months time frame, 1 to 3 year time frame, and 3 plus.
I think Sushil Bhai also summarized it quite well. I'll just put some numbers to that, that kind of a summary that, let's see, in India you get, say, 2.5 times price to book only when you are able to do, say, 3.5% kinds of an ROA. So for, the Reliance, the Jio Financial investor to really make some good money from today's levels, we are looking at profits of, say, 15,000 crores by this entity. Just back calculate that you need to build an AUM of, say, 3 to 4 lakh crores. Now, 3 to 4 lakh crores, even Bajaj Finance is not there at that AUM today, despite, mastering a lot of new segments and becoming leaders there. So I think it's quite a bit of a task for Jio Financial Services, which has been laid out. And see, without banking license, you will still be an NBFC borrowing from the market. Fine, you are Reliance, that's fine. But, our bond markets also has their own limitations to supply, cheap credit. So I think we need to wait and watch. Today's, the near-term investors definitely can, really think of better options in the market because this is valued already well. So for a 3 to 5 year investor, definitely this represents an option value. But I just think that, a lot of that option value is getting captured today. And end of the day, Nikunj, we've all seen financial services is very, very hard work. You need to have people, you need to do the same lending and collections every single day for the next 5 years. Not an easy task. All the veterans are there. The management is good. But yeah, we've seen very few successes, right? For one Bajaj Finance, which is successful, we had a Mahindra Finance, which struggled, an L&T Finance, which struggled, and Aditya Birla Capital, which struggled in the lending businesses. So I would not be very liberal to give a very high valuation today. Good price, take money off the table, see after 12 months what they do, and, then decide. That would probably be my take on this.
Sushil bhai, do you think more than talking about Jio Financials, this actually could also be a de-rating moment for a lot of other brokerages, NBFCs, perhaps distribution-led, platforms like Motilal Oswal Securities and Angel? I'm not saying that you sell them, but I'm using that for the reference for our viewers. So, Sushil bhai, look at what Jio has done. It was not about cheap bandwidth. It created a data binge in the country. It created a platform economy in the country. It created a startup ecosystem. Do you think Jio Financial Services will also be changing the rules of the financial distribution game?
Nikunj, I would take back one step and highlight a story which Reliance has emerged in last 25, 30 years. Moving from polyester, they came into petrochemicals, they came into retail and telecom. Now, it's a consumer story of India because that's where the market cap based on value to each division which is ascribed. Now, they have a customer base of 30 million, 50 million, 70 million, depending on what you see, and telecom has 440 million. Now, how do they convert the existing base? You have seen the success story of Zerodha. Similar way, how Reliance creates a customer base out of their own bandwidth with their different arms, how they create a supply chain, the platform, supporting their consumer stories, whether it's a retail or a wholesale in plastic or a polyester, and they get into a segment to be in top 3, top 5, whether it's a banking or an NBFC model, what other businesses they get in. We need to look at all that perspective before we make a decision that how Reliance will look. Today, the visibility is low. I think I would rather hear the statement if Mukesh Ambani makes on AGM, what is their vision about this company. Vision, the enabler for vision is definitely provided in terms of capital, and the net worth. But as rightly Digant said today, a 10-year bond or a 10-year term loan or a 5-year term loan, the pricing is all about 7.6, 7.7. So margin, which can be accretive from a long-term perspective, has to be showcased to people to convince that this is a better way to play the financial sector rather than buying some existing companies, whether it's in transportation finance or it's in a housing finance company or a conglomerate which is in all of it or a Bajaj finance. So thing is that all that discovery will take a quarter or two before Mr. Kamath rolls out that vision and the AGM gives a cue, because the current annual report is out, so that you'll have to wait for the next AGM as the first indicative point. I'm sure Reliance will do well, but one needs to anybody to make a tall tower takes time. The base may be sound, but every flow and every rise takes its own time, and that vision and capability along with telecom and all kind of software programs they will take. But the human manpower and a reach also takes lift. And if others took 5 years, they may do it in 1 year. But that period has to be provided for somebody to have a smooth impact on a positivity for the stock.
Fair point. So, Digant, let's nail it down to a very simple question. Where do you think the institutional appetite for this kind of a business is going to move? I mean, one side we've got startup, where there is high growth, but there is a whole path of profitability which has not been defined. Do you think somewhere long-term or long-haul folks could be forced to reduce their exposure to some of the consumer tech companies, fintech companies, and bet on Jio Financial Services? And more than anything, it would be compulsion which could fuel the stock in the short term?
Not really, Nikunj, because see, a lot of these traditional businesses, see, Jio Financial Services will be in between, say, a traditional lending business or a traditional financial services business and a tech, a complete fintech-based business, because it will probably try and use best of both the worlds. But I just think that the institutional money right now thinks that, okay, when I'm investing in traditional businesses, I want to see cash flows, I want to see profits, and when I'm investing in a tech-based business, I want to see hyper growth. This is how the institutional money in India thinks. I think Jio Financial Services right now does not fit in either of the two buckets. So I think the institutional money will actually wait on the sidelines and see what they do, because see, we really have good players everywhere, Nikunj. There's a Zerodha and an Angel in discount broking, and there's like a Moti and an ISEC in the traditional broking. Insurance, we have like 30 companies in the general insurance space, more in the life insurance space. So I don't see that there is a very easy way to disrupt any of the space, be it personal loans, be it consumer durable loans. As I said, it's hard work everywhere in the financial services space. The hard work only is not that there is a name Reliance, so you get borrowing, and there's a lot of capital which is there on the balance sheet. That's the only part where there's no hard work. Otherwise, there's a lot of hard work. So I would not really think that, Jio will disrupt everything and become like, they have the largest net worth in terms of NBFCs, because HDFC Limited is no more an NBFC now. Their net worth is probably larger than Bajaj Finance also. But that's about it. Everything else needs to be proved. So, I think I would just say that even the institutions would think that, we are better off having a Paytm on one side and an ICICI Bank on the other side, because one represents a completely tech-based and one represents something like a traditional bank, rather than, playing with Jio Finserv where everything is in the future.
All right, appreciate your time, both of you. Thanks so much for joining in and giving us a view on all the intricacies and details for the first Reliance company listing in the last 2 decades, that's Jio Financial Services.